So also the credit market is under attack. Why should you loan money from a bank? Why, if you, for example, buy a car, don't just buy the credit? I mean, that's already possible. Or if you, for example, want to buy a flat or a house on Immobilien Scout, then you could buy a credit from there as well. And so there are more and more places on the web where you can find these kind of services, and how this looks in specific will now be discussed by our senior editor from Wired, Carsten Lem. Lem, woohoo!
Hi everybody, come on up please. We have here with us two challenges to the established system. Let's both sit here, I would say. Well, how about this? So we have here Clemens Paschke, co-founder and CEO of Lendico, Berlin-based, as is Spotcap, Toby Treble, also co-founder and CEO, and both are promising to give us all money if we need it much faster and with less bureaucratic strings attached than traditional banks. Clemens, is it true that you still have posters of famous bank robbers on the walls of your office?
No, unfortunately not. It was indeed at the beginning was true. We had like a number of bank robbers actually at our walls. Now when we moved them to our new office, we removed them. And we think it's actually not fair, because I currently think the biggest actually person who steals money away from banks is actually Draghi. So it's a little bit larger than what we do currently.
But why bank robbers in the first place? There's a certain symbolism here, I guess.
Yeah, for what we see and how we see ourselves, that we indeed on the one hand enhance the credit market, so we provide more credit to the outside world, so to people who before didn't get money, but on the other hand we also provide credit to people who normally would have gone to banks and now come to us because we are faster or we are cheaper or both, and so we take away business from the banks.
That's a nice promise, and we'll get to that in a moment again. Toby, you promise also 24 hours is enough if I'm, let's say, a berry farmer in Spain and I need money to quickly expand. I can get money from you in 24 hours. How does that work?
Yeah, that's right. So that is sort of our business proposition, is to provide fast and flexible financing to small businesses in Spain, the Netherlands and Australia today. And what we do is we have a fully online applications process, which takes no longer than 10 minutes. You just need to provide some basic information, upload some financials, or if you're slightly more advanced as a business or a business owner, you can link your accounting software to Spotcap, and you can also link your bank account so that we can see transaction data live. That is enough. Takes 10 minutes for the applying director of the business, and we will then process all that data along with other data from third parties and make a credit decision within 24 hours, and you can have your funds in your bank account the next business day.
How much can I expect?
It depends on your creditworthiness, on your size, on your age, on your legal type. But in Spain, we go all the way up to 100,000 euros. In the Netherlands, up to 150,000 euros, and in Australia, up to 250,000 Aussie dollars. What's
the price for the convenience? There's usually you don't get anything for free in life, least of it money. So what's the price?
Yeah,
for the convenience?
that's true. It's probably not the cheapest form of financing, but for most of our clients, it is the only source of financing, especially when you think about unsecured lending. What we do is we don't take any security against the loans. In Australia, for instance, a small business owner cannot get access to capital on an unsecured basis. That owner will have to pledge his or her house against that. Often, they're willing to pay a little bit more to get financing on an unsecured basis, and they're willing to pay up for that convenience as well as the speed and the flexibility and transparency that we offer.
And Clemens, how long does it take for you to process any applications? You do peer-to-peer lending, we should say. So the money basically comes from the community. Then.
Yeah. So we have to distinguish between our two products. So we do personal loans, consumer loans, unsecured consumer loans, so for private individuals, and for small and mid-sized companies, we do unsecured loans. So we have a value proposition for consumer loans. We give an offering instantly, so it takes a few milliseconds, and you have the offering, so the price and the loan amount. There is a validation afterwards that needs to take place, but the offering you get instantly, and then payout of the loan is something between like 2 to 3 days. It depends on how quickly you can collect the money. On the SME side, so the business loans, we have the promise that as soon as you hand in all the documents, we have a credit decision within 48 hours, which is really, really fast if you compare it. Unfortunately, we are not there where Toby is, that we have like a fully automated process. It's just in Germany legally, for example, where we operate legally, just not possible right now. So we still have physical document handovers, and as soon as it's added there, it's like 48 hours.
What is the basis for both of you? What's the basis of the creditworthiness checks? Do you look at, Facebook, LinkedIn? What are these guys doing? Is that even part of the check? Do you go to the traditional, the providers, data providers in the background? Explain this a little bit, please.
So we do actually both. So we take normal credit bureau data, which is part of our scoring, that goes into the credit decision. But we also, I think what you are aiming for is like big data approaches. So we also use behavior on our website, social media information that I must admit it's not the major part of our credit decision right now, but it also goes into the credit check process.
It's somewhat, my answer would be somewhat similar to Clemens's, with the exception that credit bureau data for us is not a huge part. We really look at the underlying financials. We look at bank account transaction data, which is very important, but we also do profiling of the business and the business owner to see whether there has been a default in the past or any negative information. And social data, LinkedIn, Facebook, and so on, does play some part in our credit evaluation, but it's certainly not the majority today.
So if I tweet a lot about going to the casino, that does not come back to haunt me?
Not necessarily.
But if it shows up in my bank accounts, it does.
So if we can see that you're playing a lot in a casino, if it definitely increases at least the interest rate that you will need to pay, or we might even reject you. Because of the likelihood that you take out the loan out of your bank account and invest it into casino gambling is rather high then. And if you have gambled everything away, that is not the idea of taking a loan. The idea of taking a loan is to purchase something that you can afford and that you use right away, but you can only afford it later. So normally you would save money for it. So actually you invest and do the investment now and normally use it. For example, a kitchen. A kitchen is a typical example for doing an investment up front. So you use it over 10 years, and that you buy from the loan. Or a new machine for a small or mid-sized company. You will use the machine afterwards. But if you just take out the money and throw it away, that is not a good behavior. And that's normally also what we see on our platform. People don't like to give money for such purposes. So if like a person comes here and says, I want to have a 5,000 euro loan because I want to do a super nice vacation, most of the people do not invest into the loan because they, look, if you want to do vacation, why don't you save up money? It's maybe not the right decision to do a super nice vacation on Hawaii if you don't have the money.
What allows you to be so much faster than traditional banks in your decision making?
It's probably mainly the fact that it's online. We don't require any visits. We don't require any phone calls. The interaction can be entirely online, and in fact, it can be as little as the applicant submitting his or her application online, and that could be the end of it. Then he or she will be notified as soon as we've made a credit decision, and then can take and draw loans on the dashboard. So that can be all the interaction necessary, and it can be done within 24 hours, as I said. On top of that, if the client would like to speak to someone at Spotcap, they can reach out to us via email, via chat, or via phone, but they don't have to, and neither do we require any physical documents to be sent to us to evaluate. Everything that we need to make a credit decision is online.
Well, let me just ask, as a complete layman who knows that the smartphone in my pocket is more powerful than Photoshop was even 5 years ago, how do you know that what I send you is genuine and not tweaked in some ways?
I mean, that's again the beauty of receiving a lot of information from the applicant as well as from third-party data and third-party sources. So we can cross and triple and quadruple check a lot of the information to have a very clear picture when it comes to KYC, to fraud, and to anti-money laundering even. So we're very well covered when it comes to those questions.
If you make it easier to get money, maybe you also get people who have trouble getting money from traditional banks, which means you would get the more critical cases, so to speak. Do you have trouble getting money back from the people that you lend to?
Like in general, no, but of course it's the nature of the loan business that some people are not able or not willing to pay back the credit after a certain period of time. So I mean that you have defaults or late loans, that is like inherent in the business. So you will see it from time to time. The question is it actually more than you expect? I mean, that's a good thing. What we see currently, it's not the case. So we are like in line with our expectations. In terms of do we attract a different type of customer? Or is it true that all customers that we have don't get a loan from a bank? That's not true. But indeed, what we can do is we have a different investor group who is willing to accept also larger risks. So we can provide credit to people who has sometimes difficulties at banks to get a credit, and we can give, because our processes are more efficient, we can give credit to people who normally don't get a credit at a bank because it's too much effort. For example, self-employed people have a very difficult time to find credit, and it's just because the document verification, the entire underwriting process is so much more effort than with a normal employed person, that most of the banks say we don't want to make this customer because it's just too much effort at the end. Bottom line is not right. And also for the small and mid-sized enterprises, we see the same. The smaller the credit volume, the more difficult it is for the companies to find the bank who says, I'm willing to actually look at your credit application because the effort that I have with the credit application is not in relation to what I earn.
What are the typical people who come to you for seeking a loan?
I would just wanted to make a couple more points on your previous question, if I may.
Sure.
What's very important is to distinguish between the ability and willingness to pay. And ability is something that you can control very easily by analyzing financials, by analyzing the data that you collect. It's the willingness to pay that is slightly more difficult and requires more sorts of behavioral models. But linked to that is the idea of risk-based pricing, which is what we do. There's a price for everything. I was a credit investor myself before Spotcap, and if there's a higher risk, there's a higher price, and there is a price for everything. And the final point on that question I would like to make is often the businesses that we serve, the alternative to going to alternative lending providers such as Spotcap is getting no loans at all, because they can't get financing from banks, mostly because they're too small, they might be too risky, too young, or they just simply can't get unsecured financing from them. So it's not necessarily an adverse selection in the first place.
How high are the interest rates then typically?
So we charge fees upfront, one-off, and interest rates on a monthly basis, starting at 0.5%, going a little higher, all the way to 3% per month.
And Clemens, then somebody who wants a credit from the crowd, what is that? Maybe the freelance journalist who wants to write the novel, or I don't know, some.
So I would say it's actually people quite honest people like us, and also companies who are quite mature. So if you look at the companies who apply for a credit, they're on average something between 10 to 20 years old, have normally around 10 to 15 employees. So these are really small and medium-sized traditional companies, not really large, but have a long track record, have stable financing, and finances, stable revenues, totally great companies. It's just that they are relatively small and they're looking for 100,000 euro credit. Yeah, so that is not a ticket that is so interesting for banks. It's really like very, very traditional companies that we see who are applying for credit. And actually also a lot of companies then get approved, so the rejections is relatively low because it's really high credit quality. And the pricing is fair. On the consumer side, it's a mixture. It's really like employed people and the self-employed people. It's like round about, I think that we have 40% of self-employed people who come to us or freelancers. And again, we don't give credit to persons who are less than 2 years freelancing or self-employed. So you need to have like a certain track record as well. Again, so credit is not about providing money because you don't have money, but it's about providing money because you have a liquidity problem, but you have long-term stable finances, and that's our thinking. So you see that actually like self-employed, that's people who have like really trouble getting loans in general, but they can be like best customers.
Through automation, can't banks do what you guys are doing easily as well, just as an extra business?
Absolutely. A bank could build what we do within a year, quite easily, I would argue. However, the banks or in the countries that we operate in, they don't. It's a different mindset, so it really needs to be embraced from the very top, and quite frankly, often there are a lot of conflicts within a bank. So what we found and that banks prefer to partner and collaborate with fintech such as Spotcap, and we work on partnerships with banks, with the big banks in all 3 countries that we operate in, and it's a mutually optimal solution for both. The bank learns a little bit from what we do, reaches clients that they can't otherwise serve, and we get the balance sheet and the client base and the distribution capabilities from a bank. So could they do what we do? Yes, but there are a lot of reasons why they haven't and why they will not.
Do you see a risk that banks might come into your area and push you out?
Yeah, I would say first of all, we are actually coming into their area and not the other way around. But what we now see, and Commerzbank just announced that they are also opening up a P2P platform. So they also believe in the marketplace model and they see the value in the marketplace model. I think that is fantastic for the industry because it's like a clear demonstration that what we are doing is the right thing and it's moving in the right direction. That will be another competitor. So yes, some banks are moving into that sector. And as said, like I think for the industry it's good. Can banks do the same as we do? I totally agree with Toby. Yes, I think they can if they want to. It's a question of prioritization. It's a question of mindset and so on. And I mean, if you talk to the large banks, they have like hundreds of different topics that they could do. And the question is really which one you want to pick.
We heard about the rebundling earlier with number 26. I believe they're still looking for partners. Any takers? Could you see yourself be a part of the number 6, for example, or another fintech aggregator ecosystem, or would you rather go alone?
I can answer that for Lendico. We, in all countries that we're operating, we operate with a bunch of partners together. In some we work with banks together. On the sales side, we work with a lot of partners together, loan brokers and so on. I don't see any reason why we shouldn't work together with another partner like numbers 26, if it makes sense.
I totally agree. Nothing to add on that.
Then where do you see challenges in growing your business, in becoming a household name like Deutsche Bank or the other traditional financial institutions that we all know?
It's all about creating the awareness and building a brand, and that is indeed one of our challenges and one of our probably most significant challenges that we are addressing, and where to some extent we also rely on fintech as an ecosystem to become more mainstream, to become more accepted, and to become more widely known, which is currently lagging. If you think about somewhere in the outskirts of Madrid, chances are that that our ideal client has never heard of Spotcap, has never heard of alternative lending, and has probably never even heard of fintech. There's a recent study in Australia that says that only 32% of people have even heard of any fintech business, and that includes payment providers such as PayPal, which you would assume or think that a lot of people know. So I think we're still very much at the beginning of being accepted and being known as alternative lending providers.
Is it mostly a matter of time, or how do you want to tackle that challenge?
It's mainly about time, but it's also about hard work, building the brand, building awareness, building credibility and trust. And we haven't talked about competition, but I would welcome more competition in Spain, to be honest, because I see it as, to some extent, upon Spotcap to educate the market about alternative lending, whereas if there were other big competitors, they would do part of that work for us, and the pie is big enough for all of us to be winners at the end of the day.
Clemens, where do you want to take Lendico? What's the challenge on the way to getting there?
I would say the opportunity at the moment is there. So if I look that we have a low interest rate environment, especially in Europe, that investors are seeking for investment opportunities, it's right now a fantastic playing field. And the question is, can you quick enough become large enough? Because at the end, lending is also a scale business. You need to reach a certain scale to be a recognized player, to be, as you said, to have a brand, and also to have a sustainable cost base. And we as a marketplace, we always have to balance both sides. We have to balance, on the one hand, the loan request side, so people who are looking for loans, and on the other hand, the investment side. And for us, this is currently I would say, the biggest challenge, to balance both sides all the time. And as soon as we have come to a certain level, it's becoming a flying wheel, and it's a self-maintaining ecosystem.
And let me just sort of, to wrap it up, the outlook question. 5 years from now, will fintech be something that we all just sort of accept as normal, like the bank around the corner, which by then doesn't even exist anymore? So if we need money, we come to you guys or somebody else even?
Absolutely. I think most of us already have embraced and use fintech on a daily basis. That is mainly payments, but that will go on. The way we do banking, the way we borrow, the way we transfer money, the way we invest money. I think that will all fintech will be a big part in everybody's life in 5 years from now.
Yes.
And it'll be euros and dollars or Bitcoin?
I think the majority will still be in euros and dollars, and Bitcoin will also play its role, but I think there's still a way to go.
Very good. Thank you all. That's, I think, time for us to wrap up, and for me to hold this a little bit further away. Then I'll hand it back to you.
Thank you very much, Carsten. Thank you, guys.